Want to take a look at futures this morning. We are in the red once again. The Dow down 37, NASDAQ is down 27, S&P is down 6. New York Federal Reserve President John Williams spoke about the state of the economy yesterday, saying, quote, I think we've gotten monetary policy in a very good place in terms of we have a restrictive stance of policy. All that talk about we're about to have a recession has vanished. Joining me now, ProChain Capital President David Tawil. David, good morning. What do you make of these comments from him? Because if reading between the lines, he's saying, I don't think we need to hike rates anymore.
I think he left himself with a bit of wiggle room. I think he towed the party line. He was a little bit more dovish than Powell has been. But at the end of the day, I think he's saying that we're in a good place. We probably don't need to hike rates in the near term, but we'll have to wait and see. And frankly, the most important thing for the Fed, inclusive of Williams, is to get to that 2% inflation rate.
Okay, so you think that you're expecting then another rate hike later this year then? Is that what you're – because most people say September's the pause, but after that?
I agree with the consensus on that. I do believe that we're going to have another bump. But like most people, I believe we're close to the end.
All right, Ryan Payne, jump into this. I mean, this is the big debate going on right now. And I think what happened yesterday is when you saw those initial jobless claims cross, that's when you saw a little bit, the markets did tick down. And that was on a reflection that there's a little more of a bet now we're going to get an interest rate hike later on this year.
Yeah, I'm with David. I mean, the Fed is kind of like definitely maybe. You're getting this feeling of like they really leave themselves open to either maybe we'll hike again, maybe we won't. Yeah. Depends on the data. And, you know, the old saying, they're data dependent. You hear that all the time. But I think bottom line is I'm in the disinflation camp. I really think once you get past this September number in CPI, which that's all the markets care about right now, is what's going to happen with inflation. And those shelter costs are going to start to come down because they're a lag inside. If you look at the headline CPI and the core CPI, I think you're actually going to see continually, you're going to see inflation come down. I think the Fed is actually going to pause for the rest of the year. And I know that's not in the most popular camp, but I think they're done.
I think it's I think it's a 50-50 split at this point later on in the year. But David, weigh in on that inflation story here, because oil is where I think we're going to see a problem with inflation. So crude hit a 10-month high this week. Remember, the Saudis extended those production cuts for the rest of the year. And in Brent oil, crude, WTI are higher right now, more than 0.5% on both of these contracts. We saw gasoline prices over the Labor Day weekend. They jumped, new highs there. This tells me that the inflation might be coming back on a headline basis anyway.
You're absolutely right, Cheryl. Oil is an incredibly important commodity. It goes into lots of products. Obviously, it's a fuel source as well. And what's going on with the slowdown in China and therefore the cuts certainly from Russia, but a little bit surprisingly from Saudi as well, that is aligning itself with Russia at this point, is going to lead to higher oil prices. And that will go ahead and flow through our economy. And, our president and his administration have taken what I think is a very illogical stance on this, which is, first of all, we've depleted our petroleum reserves, and there is no plan to go ahead and, make up that depletion. And certainly we're at higher prices now, so it's going to cost our country more. In addition to that, the president has said that he's going to go ahead and revoke the drilling permits that were given by Trump for Alaska and the Arctic, which shows that the U.S. is going to pull back on drilling for oil. And in addition, the G7 has essentially admitted that the price caps on Russian oil were a big joke. And Russia, frankly, was able to get around any sanctions. So our oil policy here in the United States is we don't want to drill here, even though it could be good for our country in terms of security and independence, also jobs, also economic stimulus. We would rather go ahead and cut drilling on oil here, allow others to go ahead and dictate the price of oil, and then, frankly, as a result of them dictating the price of oil, dictate our inflation rate. And that is really bad. I don't care what your environmental concerns are. I don't care about your ESG long-term issues. This is bad for the United States right now.
Yeah, well, look, I mean, what's interesting about this is that those leases that you're talking about that were canceled in Alaska, those were actually put in place in the last few days of the Trump administration. And the first thing that President Biden did is said, I'm going to freeze all of that. Unfortunately, the people of Alaska are the ones that are suffering. And eventually it's going to be the people of this country, because they're going to see their gas prices, their diesel prices, their airline fares start to jump because of these energy prices. Oh, and by the way, your grocery store prices are going to keep going higher because the trucks that have to drive your food from the farm to the store have to pay those prices. Final thoughts.
I totally agree with that. And therefore, to your point a little bit earlier, that the inflation rate may be stickier than we thought. And so therefore, we will need another increase in interest rates by the Fed, which will certainly hurt the economy overall, is certainly bad. And frankly, just as a parting point, Walmart has been decreasing wages for entry-level workers going forward. And so therefore, maybe there's a concern. Of course, I would prefer disinflation, but, we may get deflation, and that would be awful for the economy.
Yeah, because the American worker, whether it's Walmart or somewhere else, they are making less, they are paying more. That is concerning and something that we're going to have to keep on. David Tawil. David, thank you very much. Good to see you.